Alright, so in this episode, we are covering probably the most important topic in the psychology of trading. If you take anything away from this channel, it should be the lesson from this episode. We believe this topic is so important that we are going to repeat ourselves, just to make sure the concept is truly hammered into your brain.
You don't lose in the market. You lose in your mind.
This is Trained Mind Trading, the channel for traders who know what to do, but still don't do it. And here, you'll train your mind to finally change that.
Welcome to this explainer. Today, we're tackling an obstacle that literally every single trader faces, but very, very few actually conquer. We are talking about mastering your own trading psychology. Seriously, if you've ever felt like your brain is just actively working against your portfolio, you are in exactly the right place. Let's dive right in and break the trader's self-sabotage loop. So I want to start with a question. Why do you keep losing good trades? I mean, really think about it. You study the charts, you put in the grueling hours backtesting, you meticulously follow your rules, and yet somehow you still end up blowing accounts or just leaving massive money on the table. You're doing absolutely everything right on paper. So what in the world is going wrong in practice? Well, there's this massive disconnect most of us suffer from. We usually want to point the finger at a bad strategy, or we say the market conditions are rigged. But the actual reason? Self-fulfilling prophecies. It's time to totally shatter the idea that the market is somehow out to get you. The uncomfortable truth is that your own belief system is the real culprit here. All right, Section 1, the real reason you lose. Let's shift our focus to internal accountability. You spend months refining your strategy, waiting for the perfect setup. You enter the trade, and within minutes you panic, exit early, and watch the market hit your target without you. You didn't lose because of the market, and you didn't lose because of your strategy. You lost because your own belief system forced you to behave in a way that created the exact loss you were trying to avoid. In psychology, this mechanism is known as a self-fulfilling prophecy. Sociologist Robert K. Merton defined this as a false definition of the situation, evoking a new behavior which makes the originally false conception come true. Moving on to Section 2, the self-sabotage loop. This is the psychological mechanism at work behind the scenes. This diagram shows what is happening inside your mind. The loop starts with a negative assumption. For example, a thought like, "This trade will probably fail." That thought immediately triggers a physical, emotional response, usually anxiety or fear. That fear dictates your next move. You hesitate, you tighten your stop, or you exit prematurely. That behavior guarantees a poor outcome, like a missed profit or a small loss. And when the trade closes, you tell yourself, "See, I knew it." The original negative belief gets reinforced, locking you into a closed cognitive loop. Until you interrupt this cycle, no technical indicator will ever make you a profitable trader. Do any of these common prophecies ring a bell? I always mess up good trades, which leads you to overmanage a position until you completely ruin it. Or how about, if I don't take this, I'll miss out? That is classic FOMO that leads to terrible impulsive entries. Or maybe, I can't handle losses, triggering instant revenge trading. You see, these aren't just passing thoughts. They are the invisible scripts running your entire behavior. Let's walk through a highly relatable scenario. The perfect setup, but the wrong execution. You spot a completely valid setup, you enter. But almost immediately, this tightness hits your chest. You start intensely watching every single tick of that 1-minute candle. The anxiety spikes, so you exit early just to relieve the physical stress. And then you watch the trade run beautifully to your target without you. Look, that wasn't a market failure. That was a belief-induced behavioral distortion. Which brings us to Section 3, why your brain seeks failure. Let's look at the biological default. Now, before you get too hard on yourself, you should really know that this isn't some personal flaw. It's actually biological. Prepare for a genuinely mind-blowing fact. Your brain actively prioritizes prediction over accuracy. It's a concept known as predictive processing. If your brain builds a model that says, "I'm a bad trader who fails," it will actively filter reality to match that negative model just to reduce cognitive dissonance. No joke, your brain literally wants you to fail just to prove its own prediction right. And trading? Well, trading is the perfect storm for this biology. Think about the constant uncertainty we deal with. The markets do not give you immediate validation. The feedback is incredibly noisy. You can follow your rules to the letter and still lose money. Because of this totally unclear feedback loop, cognitive biases like confirmation bias, negativity bias, and loss aversion just grab the steering wheel and take over. Section 4. The identity trap. This is where self-worth gets dangerously tied to outcomes. This goes even deeper than just analyzing a chart. This is the absolute most dangerous layer of self-sabotage, where the outcome of a single trade gets hardwired to your sense of self-worth. Psychologist Carol Dweck's research captures this perfectly. In a fixed mindset, you're telling yourself, I'm not disciplined, or I'm just unlucky. Those are destructive self-programming scripts. Now contrast that with a growth mindset. I am learning consistency, or I follow my rules. Shifting your identity from fixed, rigid labels to growth-oriented actions changes absolutely everything. Here is an advanced insight to really chew on. Self-fulfilling prophecies are actually an adaptive survival mechanism. Your brain creates these illusions of predictability simply to survive the heavy stress of uncertainty. But the irony? Out there in the financial markets, predictability is a complete illusion. Flexibility, not predictability, is your true key to survival. All right, Section 5, reprogramming your trading mind. Time for the actionable mental protocols.
To break the pattern, we must build a behavioral execution protocol. Let's build yours right now. Grab a pen and paper or open a blank spreadsheet. We are going to map out exactly how you will operate moving forward. Phase 1 is the pre-trade reality check. Before you take any position, you have to separate the actual data in front of you from the narrative running in your head. This layout shows how to divide your thinking. On the left side, we have objective reality, the undeniable facts on the chart, like price hitting a key moving average. On the right side, we have subjective narrative, the fear of losing or the anxiety you will miss out if you don't enter right now. By physically writing down these two distinct columns before you enter a trade, you create cognitive distance. You force your brain to see your anxiety as a separate entity from the chart itself. Once you separate the facts from your feelings, you move to Phase 2, the pre-commitment protocol. You must lock in your decisions before any financial risk is applied. Write down these 4 exact metrics for the setup: entry price, stop loss, target, and rules for exit. Now make a verbal pledge. You commit to zero interference unless an exit condition is met. Never rely on a mental stop. In moments of stress, your brain prioritizes comfort over discipline. Hard code these parameters directly into your broker so you cannot sabotage the trade when panic sets in. Completing these 2 phases means you have outsourced your trade management to your calm, rational self. You have stripped the panic away from your future self before they even enter the market. Even with strict parameters, in-trade paralysis happens. Phase 3 uses if-then conditioning to handle those inevitable emotional spikes. Write down the 2 emotional triggers that cost you the most money. For many traders, this is the sudden urge to revenge trade after a loss, or the impulse to panic sell during a minor pullback. This diagram shows how we assign a rigid, mechanical reaction to those triggers. For example, if you feel the urge to exit early out of fear, then step away and wait 2 full candles. This logic conditions your nervous system. Instead of freezing, your brain defaults to an automated, robotic action. That brings us to Phase 4, the final step: building the behavioral data tracker. Open your current trading journal, select your profit and loss column, and delete it. This dashboard shows exactly what to track. There are no dollar signs here. Instead, you track a strict rules followed column with a simple yes or no, and you record your emotional state before and after the execution. To test this protocol, you will use exposure therapy. Lower your position size to micro lots to completely remove financial stress. During this phase, making money is irrelevant. Your singular goal is taking small, rule-based setups and letting them play out fully. You are actively training your body to tolerate uncertainty without interfering. By shifting your core metric from dollars earned to behavioral adherence, trading stops feeling like an emotional casino game. It becomes a fully manageable, repeatable exercise in strict operational discipline. You now have a complete behavioral execution protocol: data separation, pre-commitment, if-then logic, and process tracking. But to make this permanent, we have to address the deepest layer of self-sabotage. It is the internal script you recite when things go wrong, the voice that says, "I am an inconsistent trader," or "I always mess up." This aligns with research from psychologist Carol Dweck on the fixed mindset. When you adopt a negative label about your identity, your brain forces your behavior to match that label to reduce cognitive dissonance. You need a new script. From now on, your identity is a trader who executes their rules flawlessly, regardless of the outcome. You accept the foundational mathematical reality that a good trade can lose and a bad trade can win.
Next up, you need to build automatic, positive responses. First, start tracking behavioral data in your journal. Did you actually follow your rules? Seriously, ignore the P&L entirely for a moment. Second, use if-then conditioning. If I feel fear, I will wait 2 candles. Third, reprogram your identity through positive reinforcement. And fourth, detach the outcome from your skill. You've got to memorize this single rule. A good trade can lose, and a bad trade can win. Focus entirely on the process. Now, for those of you struggling with really intense fear, you might need a little exposure therapy. You do this by deliberately taking small, heavily rule-based trades and forcing yourself to let them play out fully. Hit the stop loss or hit the target with 0 touching. By doing this with tiny, manageable risk, you are literally training your nervous system to physically tolerate the uncertainty of the market without panicking. And that brings us to our final, massive paradigm shift. You don't become profitable by predicting the market. You become profitable by predicting your own behavior. It's time to stop fighting the charts and start mastering yourself. Because once you can predict and control your own reactions, the profitability, well, it naturally follows. So let me leave you with this. What behavior are you going to predict and change on your very next trade?
That's one more pattern. Named, understood, and now in your hands. Becoming a profitable trader isn't about the next setup. It's about becoming the person who can follow it. Subscribe for your regular bite of wisdom. Train the mind, the trades will follow.